Folks, if I told you NXP Semiconductors is quietly turning into an AI stock, you'd probably laugh. I laughed too. But then I looked at the edge AI chip market projections through 2028, and I saw exactly where NXPI sits in that map. And let me tell you, my entire thesis flipped overnight. Today, if you missed the NVIDIA run, if you feel like AMD already ran without you, if you've been hunting for the next mover in the AI semiconductor rally, but everything looks too expensive, this video is for you. Because Wall Street analysts are starting to whisper about NXPI as a stealth AI play, and almost nobody has priced this in yet. Stick with me to the end, and you'll know exactly why NXPI could be one of the most asymmetric AI bets on the table right now, what the price targets look like, and the 4 specific catalysts that could trigger a re-rating in 2025 and 2026. Let's get right into it. First, the setup. Everyone on financial Twitter is obsessed with data center AI. NVIDIA, Broadcom, Micron, the hyperscaler build-out. That's the loud trade. But there's a second wave coming, and it's called Edge AI. We're talking about AI inference happening directly on cars, factory robots, industrial sensors, smart appliances, medical devices, not in the cloud, on the device itself. According to multiple Wall Street research notes, the edge AI semiconductor market is projected to grow from roughly $20 billion today to over $90 billion by 2028. That's more than 4x growth in less than 4 years. And here's the part nobody's talking about. NXP Semiconductors is one of the top 3 players globally positioned to capture this wave. Let me explain why this matters. NXPI today trades like a boring auto chip company. The market values it on cyclical automotive earnings. The PE sits around 20, way below the semiconductor sector average. Meanwhile, NVIDIA trades at 35 times forward earnings, AMD around 40. The market has not yet woken up to the fact that NXP's product roadmap is shifting hard toward AI-enabled processors. That gap is the opportunity. Now let's break down the 4 core reasons NXPI is becoming an AI stock in disguise. Reason number 1. The S32 processor platform. This is NXP's flagship automotive compute platform, and the newest generation, the S32N, is purpose-built for AI workloads inside vehicles. We're talking real-time sensor fusion, autonomous driving inference, in-cabin AI assistance. NXP already supplies chips to basically every major automaker on the planet. Toyota, Volkswagen, Ford, BMW, Hyundai, you name it. According to industry reports, NXP holds roughly 14% global share in automotive semiconductors, second only to Infineon. As cars become rolling AI computers, every single vehicle becomes a higher content opportunity for NXP. Analysts estimate the semiconductor content per vehicle will rise from about $600 today to over $1,400 by 2030. NXP captures a disproportionate slice of that. Reason number 2, the partnership with NVIDIA. Yes, you heard that right. NXP announced a strategic collaboration with NVIDIA to integrate NVIDIA's Drive AI platform with NXP's S32 processors and safety microcontrollers. This is huge. It means NXP is not competing with NVIDIA in automotive. It's becoming the connective tissue that lets NVIDIA's AI brains actually function inside real cars. Every automaker that adopts NVIDIA Drive is essentially also adopting NXP. That's a hidden tailwind almost nobody is modeling into NXPI's earnings yet. Reason number 3, industrial and IoT edge AI. NXP's IMX processor family is one of the most widely deployed edge computing platforms in the world. Factories, smart cameras, industrial robotics, medical imaging devices. NXP recently launched the IMX95, which includes a dedicated neural processing unit, an NPU, for on-device AI inference. According to the company's investor materials, NXP expects industrial and IoT to grow at a double-digit CAGR through 2027, driven specifically by AI edge demand. This is the segment Wall Street is sleeping on. J.P. Morgan and Morgan Stanley have both flagged NXP's industrial AI exposure as underappreciated in recent notes. Reason number 4. The cyclical bottom. NXP's automotive and industrial segments went through a brutal inventory correction in 2024. Revenue declined, margins compressed, the stock got punished. But according to recent guidance, channel inventory is now normalizing, and orders are beginning to recover heading into 2025. This is classic semiconductor cycle behavior. You buy these names when the cycle is bottoming, not when everyone's celebrating. NXPI is currently down roughly 30% from its 2024 highs. That's the entry window analysts are pointing to. So let's talk numbers. What does Wall Street actually think? The consensus 12-month price target on NXPI sits around $250 to $270, implying meaningful upside from current levels. But here's the key. That target is based on traditional auto chip multiples. If the market starts re-rating NXPI as an AI-exposed name and applies even a modest AI premium, we could see targets push toward $320, $350. Some bull case scenarios from boutique research firms have floated $400 price tags by 2027 if the edge AI thesis fully plays out. Earnings power tells the same story. Analysts model NXP's EPS growing from roughly $11 in 2024 to over $15 by 2026. Apply a 25 PE, still below NVIDIA's multiple, and you're looking at a $375 stock. The math is not crazy. The math is actually conservative. Now, let me address the risks honestly, because this isn't a free lunch. Automotive demand could stay weak longer than expected if global EV adoption slows. China exposure is real. NXP generates a meaningful portion of revenue from Chinese automakers, and U.S.-China tech tensions could create friction. And competition from Infineon, Renesas, and Texas Instruments is fierce. These are real risks, and you need to size your position accordingly. But here's the thing. That's exactly why NXPI is still cheap. The risks are obvious. The AI upside is hidden. That's how asymmetric opportunities are born. When everyone agrees a stock is great, the upside is already gone. When nobody's looking, that's when the real money gets made. Let me give you the catalysts to watch over the next 12 months. First, CES 2025 and 2026. NXP typically announces major automotive AI partnerships at this event. Second, the next earnings call where management is expected to provide updated guidance on the AI compute roadmap. Third, any expansion of the NVIDIA partnership. Fourth, signs of automotive inventory restocking in Europe and China, which would confirm the cyclical recovery. If even 2 of these 4 catalysts hit positively, you're going to see institutional money rotate into this name fast. And by the time the headlines catch up, the easy gains will already be priced in. So, to wrap this up, NXPI is not the loudest AI stock. It's not the sexiest. It doesn't have Jensen Huang on stage waving a chip in the air. But it is quietly positioned at the intersection of automotive AI, industrial edge AI, and a cyclical recovery. The valuation is reasonable, the catalysts are stacking up, and the market hasn't priced in the AI narrative yet. That last part is the whole point. If you've been searching for the next semiconductor name before the crowd shows up, NXPI deserves a serious spot on your watch list. That's it for today. If this breakdown helped you see NXPI in a new light, please hit that subscribe button and drop a like so I can keep bringing you deeper research like this. Take a close look at NXPI Do your own due diligence, and I wish you all profitable investing. As always, all investment decisions